Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. I think the last recap I did was Thursday. On that Thursday, I told you how I pretty much reduced many of my swing trades. I went from portfolio approach to tactical approach, from 6 to 9 longs that I've been trying to carry, or 4 to 9, depending on where we were post-election, to pretty flattish. So on Friday morning, woohoo, felt great. Futures down 12, 13 handles. Might have, sold the most timely sell ever, but then PS, we rallied all back on Friday, and then today a little bit of an update. But at least as a trader, which we all are when trying to trade actively, if you sold Thursday, you didn't wake up into the volatility on Friday, and you were able to perhaps, reposition verse at 23.55. Remember, I said we have to stay below 23.55 to sellers from Thursday. Really want to flex our muscles, but you know what? They didn't. That pivot was reclaimed. The spiders reclaimed its pivot. The small caps reclaimed that pivot. The banks reclaimed their pivot. Everything basically went back above that weekly support, making it as if Thursday was a non-event, and just keep with the same composure until something materially changes. So at this point, I'm trying to be a little bit more tactical. I'm trying to make some cash flow versus sitting in multiple positions like I was doing for weeks, and it feels a little odd, and it also a little irritating when some things that you had that you really probably didn't have to get out of, continue, and you don't want to get back in. And that's the problem that I think America has right now. If they sold the financial crisis, even before it, they looked great, but then they never got back in, they don't look so great. Or if they got stopped out at the bottom, they said, hey, I hate this market, I never want to get back. And that's why it's hard to, once you get out, to reposition back in a way that you feel like you have an edge. So let's get right to the chart of the S&P cash and the spiders anyway. So here you go. This is when the S&P triggered right after the election. That day, didn't matter who was elected. I guess maybe the market did like Trump better. Open lower, closed strong, took out the descending trend line, showed commitment to it, and then we've been in this accelerated trend ever since. Sometimes it was choppy. It was very choppy into here. Then you had that quick move that wound up getting negated. Right here looked as if we might break this accelerated trend line. Instead, we held it. Remember this small little red dog reversal right there, where it, we talked about that 2285-ish. Took it out, came back above, and then broke above 2300, and then now look where we are. About a week ago, we held the 3-day pivot, and then this was last week. So this was Thursday's little bar that actually, wound up being a little bit of a bottom tail. Then you had the open into this. This was 23.55. On Friday, we went to 23.52. We reclaimed 23.55. That's 3 friggin' handles. You could have bought back on Friday or covered if you were short. And now here we are, right near the highs. And we'll see what we do tomorrow into Trump. Okay, he's addressing Congress for the first time tomorrow night. We'll see where we are. Tomorrow, a lot of things, we could readjust by then. The small caps, let's see how they're doing. Hanging in there. It's been very, very choppy, but, held the 21-day, strong all day, right near this pivot resistance. I would not be short. I don't know if you could, be all in long, but it looks as if it's going to go again. Okay, here, looked a little wishy-washy last Thursday. What did it do? Came back, reclaimed Thursday's low, took out Friday's high, different adjustment areas. That's what I try and teach you, the adjustment areas. In my note this morning, I talked about, I said, can the IBB get above 290? That it held 286 and it's kind of acting better. So what did IBB do today? Woo! Why was this a pivot? Because this was Friday's high. There you go, 290.10. What did it do? Held actually above Thursday's low, where the spiders in some sectors went below it, so it held above it, showed a little bit of relative strength. And then boom, took out the 2-day pivot. You could have bought here not knowing it was going to take out this whole range, and now here it closed on the highs. So does it move north of 300 and go nuts? Maybe. All I would say is it doesn't look like a blaring short like some of you guys keep saying. But at this point, here's some resistance and looks like it's going to take it out. Ever since this big wide range engulfing day, the buyers have been acting much better. So controlled pullback, could have fell apart. Friday held up. Today went above that little 2-day pivot. Now look at it right into resistance. So, not too bearish there. XLE, I guess I took a little bit of a lazy approach. Why is this a lazy approach? Because I bought some XLE today. I've tried it a few times this year, and it's been a laggard. Hasn't done anything. It's still in a broken trend. I'm long versus this. Small divergence today. Felt as if some of the names are stronger than maybe they were. It's still below the 8-day, the 21-day. I'm breaking a rule by being long this. for now. It's just really a little bit more than a feel. It's more like a tier 1. I'm in tier 1 here. You know, if it were to break or open below this, it wouldn't be fun, but we'll see if it gets better. Then it's really got to clear this with some kind of crazy authority to get much better. It's not quite there yet. Then you have the Qs. What are you doing? Qs hanging in there, you know, had a little bit of a shake the tree last Thursday, but then on Friday held firm and now looks with time like it can go again. And then also the banks, FAS, little relative weakness Friday, didn't care today. Right back, you know, into this upper end of the range, held the 8-day. This was your breakout above that 2-month or so channel. And again, you know, just nothing, the sellers aren't taking the ball when they have a small little handle on it. But right here, we'll see what happens next. Bank of America did not buy back. Last time I bought the dip pretty well, and this time, you know, I just didn't do it. So anyway, with that being said, here was the last time we had a really nice strategy with Bank of America, besides obviously back here. Buy some, add some, sell some, and then you know, I think we bought this dip here, sold into there, did nothing with this, and still hanging in there. At some point, it looks like it's going to go higher. TLTs open lower. I think that they're going to raise in March. The street's only up to 50%, so if that's the case, you know, you should be able to maybe fade into this. I'm short a little bit overnight just for S's and G's. We'll see if it could fill this gap a little bit. I still think this makes new lows in the year, but we shall see. For those of you who are short the GDX, you probably had a good reason why, or at least not be long. You know, you want to see technically why? I'll show you technically why. Well, technically why, a few things. First of all, came back into resistance. Another thing, closed near the lows. Closed near the lows. Look where the weekly high is. Look where it closed on Friday. Then you go to the GLD. The GLD, besides today, was at a weekly high. So you see 3 days of strength in gold while the GDX headed lower. So right there, it's a divergence telling you that the GDX is weaker. Do not be long the GDX, and be careful perhaps with the GLD because it's coming into this 120 area that we put down as a bigger downtrend line. So anyway, today, what did the GLD do? It did a red dog reversal. What's a red dog reversal? If you're watching this recap, you've probably watched me in the past. That's when it comes above a prior pivot, squeezes, comes back below, and that's your exit. If you were long here and you said, I'm looking for an exit signal, there's your exit signal. If you weren't long and said, hey, we had a big move in the GLD since reclaiming the 8 and 21 day, let me look to reshort it here, you know, when it broke back below this 119.88, which is the pivot. So you could be short 119.88 versus today's high of 120.40. What's that, like 50-something cents in risk and closing the lows? You know, if this was a stock, I would definitely be shorted, but it's gold and you have the dollar, you have all the other things that are going on overnight. I just didn't do it because I didn't feel like, you know, being involved in this for overnight. I haven't been trading it that often, but some of you guys who trade gold asked me what I should do if I'm trading gold. I said at this point, sell it if you're long and maybe be short for a pullback. As far as high beta names, Facebook from last week, still in there, still hangs around. This was that, you know, pivot buy area. Came back to retest it, and now it's back at highs. Still looks good. It's not a short in my opinion, but you know, if you have loose stops and you stayed in it, congratulations. You did better than I did. You know, I had a nice 2-day trade and sold it on Thursday. Never bought it back Friday. You know, did a small trade in it Friday, but just didn't stay with it, which I should have. But it is what it is. Baba also was a nice trade last week. Came in. At this point, still holds this channel. At some point, maybe it looks as if it's going to take this out and maybe get above it and stay above it for a time. Nice little trade last week. Stopped out here. If you got stopped out into this bar, you had, you know, a few opportunities to get back in it on Friday. When it went below this pivot, came back above it, and then even today, it went from red to green for a trade. Some of you guys caught it. So lots of little tactical things to do if you don't want to sit and just be in 5, 6, 7 positions because you think something's going to happen, some kind of black swan's going to go. You know, you can't trade based on a black swan potentially happening. People have been saying that since 2012. But anyway, if you want it to be lighter because there's things to do if you have the right tactics. You might not make as much if all of a sudden we keep trending and you're not holding 5, 6 things. But if you're holding 5, 6 things, those pivots where you add for additional cash flow, okay, to create more alpha on your positions instead of holding it and adding, you're just trading it at those points, making some money and making a little less, but staying with it with a little less overnight risk. But it doesn't mean also blindly short, because a lot of guys who have been short from last week, jumping off bridges and from months ago, who even knows what they're doing? They're, you know, scared to turn on the financial networks. But, you know, with that said, I don't like to see that either. As far as Tesla's concerned, I had bids in lower. just missed. My bid started at 241.50 down to 238.50. I was thinking maybe that they get through the 50-day, purge some people out, come back above instead. It held a little bit above it, 51 cents above my first bid, so I'm not in Tesla yet. Here was that red dog reversal ahead of earnings. I don't think anyone went short earnings, but it was up 4. Could have went from up 4 to down 4, and then boom, here's that gap. If you were long because it did a small reversal on Friday, unfortunately things like that happen. You probably got stopped out through 250.20, and now maybe we'll wait and see if this pattern, changes. Right now at this point it's on the defensive, not above the 8-day, not above the 21-day, holding the 50-day, which is just bigger support after the size of the move that it had, to start the year. So we'll see if it could rebuild and get constructive again. This is when you had the break of this descending trend line. 100 points into earnings, good spot to reduce no matter who you are. And then if you're a trader like me, you don't take stock into earnings anyway. So, you've had some trades along the way. Now we'll see what happens with this point of reference, which is this 242 now. The video on the different side, if you traded that one and you took some home overnight because of the reversal Friday, this one you actually got paid on, and you could have actually bought it in the first little while too. I think this was one of the positions I made some money, and it was only up 60 cents to start from where it was. Goldman Sachs upgraded it, so it was like only up 50 cents. I'm like, hey, it's right around Friday's high. I could play it for another little trade, and gave us some decent cash flow. But if you were long it from the red dog reversal here at 99.68, this one, if you took a third, you actually got paid. If you did that with Tesla, you didn't. It happens. So now at this point, we'll see what happens if it can get into this resistance. I would say this is your easy bounce, from 120 down to the support that we talked about on Friday right here. This is your targeted buy in the hole. Here's your little day, your day and a half trade, and now it might go sideways before doing something. So I would be very light here overnight if you're in it. What else? Apple. Buffett, talked how he increased his stake. They tried to sell it on the open, and then it regrouped, and it's just, still holding above the 8-day. I'd love to see it go sideways for a little bit, so this way next time it makes a new high, some of us would jump into it with a little bit more conviction versus, being a little careful considering the size of the move that it's had from the red dog reversal here and from the post-earnings strategy where it held the gap and then triggered above the post-earnings candle. Nice move here. Now we'll see what happens here with the little sideways action. Some would say they would think it would have acted better today. Maybe, but it's also had a big run, and Warren did a lot of his buying earlier. So we'll see. To me, it doesn't. If they would have sold it down, oh, look at that, it's overbought. If it can't go up when Buffett really still loves it and hasn't sold it, then that might have been included to take some profits in the overall market too, but it didn't happen. So it's still in that same trend. It's still above the 8-day, and we'll see if we go sideways and then get above it, or sideways and break below it. At this point, I'm flat Apple. And that's about it. It's Monday. There were definitely some things to do. Tomorrow night, we have the Trump address. Definitely think tactical bulls like me that brought down some risk on Thursday-ish are trying to trade and make money. It is a little frustrating. I'll tell you, I like to be bullish. I like to hold positions. It wouldn't have been so bad if we traded down Thursday, opened down Friday, small retracement up, and then corrected a bit. Didn't happen, so we trade what's in front of us, not what we want. So now at this point, if you're kind of flat-footed, you'll figure out ways responsibly to make money using pivots. And guys on the chat room did really well. DP, you got to give him a high five. He's been holding a lot of your guys' hands through a lot of these bios. His little ZYNE, just in general, that space is doing really well. It's in the marijuana cannabinoid spell. I don't even say it right, but anyway, trending well. We'll see what happens in the next day or so if we can get above this. GWPH, which is considered the leader of this whole group, gave you a red dog reversal on Friday. What's a red dog reversal? Well, you know what that is. It went below the prior low after a pullback from above 130, decent entry. Then it went above that Friday high and gave you a little extra follow through. So right there, without having to hold excessive risk, you could have made good money on Friday with it. And then today was down a little bit, got above this, you could have made a little bit more. And now we'll see if that's a new pivot or a higher low. And most of the big catalysts on this group isn't coming out till May or June. That's why I'm in some May calls. That's it. Got to catch the ferry. See you in the morning. Have a good night.